Hi there. I guess I have a personality that I don't like to hear something illogical or suspicious. Because of my personality, I encounter so many questions in my daily life that annoys me. I'm here today to share one of my questions recently I came up with and my answer to that problem. I hope you like it. So today's question, are software engineers in Silicon Valley really paid so high? I believe you have heard about high cost of living in San Francisco Bay Area. I experienced it real life when I lived there until a few years ago. My friend's earnings there are incredibly high, like a few $100,000 to a $500,000. To be clear, $100,000 is entry level, according to him. Then I always wondered why their salaries are crazy high. More than that, how can tech companies afford to pay such amount of money to engineers? So I sought after a method to somehow estimate if their economy size is reasonable and also if software engineers' salaries are reasonable. And I reached some answers. Here I tell you. So let's take Facebook as a first example. They have 45,000 employees and assume they all make same salaries, 100K per year. Now, as you know, when your salary is 100K, the net pay that the company has to pay for you is more than that. So this time, let's assume the company spends 150K per year in total per employee as a payroll. Now check this out. Facebook annual revenue in 2019 was 17 billions. Among that, their gross profit is 57 billions. This is a very good number for business actually because usually you have to spend huge amount of money for equipment and so on. But the tech companies basically just need computers. So guessingly that is the reason they have a high gross profit compared to the revenue. So now their operating expense is 13.6 billion for research and development and other 20 billions for sales and so on. So to be clear, I'm not a business expert at all, so I don't really know where payroll is included in these expenses. But I believe it belongs to one of those. For defending Facebook's owner, I just added that they paid 6 billion tax too. Anyways, here we come. The net income of the Facebook is 18 billions per year. This roughly matches my calculations, namely gross profit minus expenses and tax. So they can use this $18 billion for future investments so on next year. So now let's recall. If the company pays 150K per year per person and the total number of employees is 40,000, then Facebook has to spend almost $7 billion per payroll. Does it make sense compared to their income? That's the point. Like I said, their gross profit is $57 billion and the net income is 18 billions. They paid payrolls from the gap between these numbers, or 39 billions. So $7 billion divided by $39 billion is 18%, which is actually a very good number in the usual business sense. I believe many business textbooks says a company can spend 30% of their profit for payroll. Facebook's number is only 18%, so paying 100K annual salary to each employee is a piece of cake for them. They can probably even pay 200K per year per employee if necessary. Now let's check Twitter's case. They have 4,600 employees. If they have to pay 100K salary, they need zero point 0.7 billions at least. Their annual revenue in 2019 is 3.5 billions. The gross profit is 2.3 billions and the net income is 1.4 billions. So like I said, they most likely pay payrolls from the number that the gross profit minus the net income, which is zero point 0.9 billions. They need zero point 0.7 billion, but they only have zero point 0.9 billions, which is almost 80% of their money. Of course, if they reduce the net income, they have no problems to pay those payrolls, but the net income will be used for many purposes needed in future. So my opinion is Twitter is not as healthy as Facebook or might be better to reduce their payrolls. Now come to the real question. What about the startup companies? According to some information, 90% of startups fail in Silicon Valley every year. That said, many software engineers work at startup companies. I believe they are also paid 100K per year. Is that okay to the company of these sizes? Let's see. Assume that the company has 50 employees. If they want to pay 100K salary, they need $7.5 million per year. But of course, as we saw already, payrolls are just a part of their revenue. Facebook spends 25% of their money for payrolls. Given that number, the startup's gross profit, net income, the difference must be $30 million. It's not ideal, but we can set the zero net income at worst case. That case, the company has no money to prepare for the next year's business, so it should be very risky, but let's assume now anyway. Then their gross profit can be $30 million to pay that payrolls. Usually in tech industry, they don't need to cost so much for running a business because like I said, what they need is just the computers. So gross profit divided by revenue is typically 70 to 80%. Then now we know that the company at this size must make $40 million per year. Is it easy for them to make that amount of money? Of course not. Even if they set the payroll to half, say 50K per year per employee, the company has to make $20 million revenue per year. So you can see how obviously difficult to run a startup is. Then why can't they pay 100K salary to employees? Still, as we saw, for Facebook, it's a piece of cake. For Twitter, they probably can do it. But most of startups never be able to do it. Then how do these startups pay the salary? I think the easiest answer I can come up with is external fund. Namely, they don't pay payrolls from their pocket. Investors pay money for future for the case the startup company becomes big, like a Twitter or Facebook. The startup companies have no money to pay software engineers enough for Bay Area standard, but they need to, otherwise they cannot employ good software engineers. But points are, even with good engineers, it is still difficult to make that startup profitable enough. So a lot of startup fails. That makes sense. And engineers move to some other companies after one company fails and make another 100K salary again. This is what is happening in Bay Area, I believe. Last, let me show you some interesting information. 1. How about car industry? Here's Toyota information as an example. They have a 300 billion revenue, 45 billion gross profit, 20 billions in net income. Those are in US dollars. You see, they earn only 45 billion profit out of 300 billion revenue. This is because their business involves a lot of equipment and logistics and so on that costs a lot of money to run their business. That's a very big difference from tech industry. They have 360,000 employees and share 20% of 45 billion minus 20 billion. Then the salary is only 14K per year per employee. This is ridiculous to people in the United States probably, but I believe Toyota involves a lot of people from low-wage countries. Then their business could make sense and could be enough to make profits. So what I wanted to say here is the reason Bay Area can pay high salary is partly because their business model, they just need very few investment in equipment and so on. Last but not least, I want you to remember the term revenue per employee. This concept makes all calculations I did much more simpler and easier, although make less accurate, but still it's very useful. So revenue per employee is how much money an individual employee on average make for the company. Imagine your salary and how much you contributed to make money for your company's revenue. You can easily understand your contribution or average employee's contribution must be bigger than the salary. Otherwise, the company get red ink, so they cannot pay your salary. So here's a useful plot of some high profit companies. You see Facebook makes $1.6 million per employee. That's why paying 100,000K salary is very easy to them. Now you can do the same math to any companies you are interested in. Check the company's revenue and number of employees. That's it. Usually the revenue per employee is 3-4 times higher than your salary. If not, the company may be house of cards. Thanks for watching. See you next time with another question.